So Ken here, thank you, Rocky, for connecting Ken to us. There you are. Apparently, and hopefully you would agree with this, you are all things crypto.
Nope.
Nope. Okay, well then in that case, thank you all for joining us.
Are no gurus.
Yes, yes. So, but we thought it would be a really good opportunity just to have a another voice to kind of give us different perspectives. I know we all research a lot, we learn a lot, we share a lot, but it's always great to have one more voice kind of come in and just be a part of the conversation. So with that, I don't know if you, most of the people here, as it relates to crypto, would you guys say you're newbies, like start me off at the very beginning? Would you say you're kind of intermediate?
If you're new, give me an elbow in the air. If you know what you're doing, if you can teach this class, put your hand in the air all the way up. See some chicken wings. I see some chicken wings. Some hands down. Some hands in the pockets. Yeah, mildly confident. Excellent. Yeah.
Okay.
Thank you guys.
You go ahead and get. You go ahead and do what you have to do.
My name's Ken. I appreciate it. Known Corey for several years, so it's fun to be able to help out.
And Corey is Rocky's son, right?
Rocky's
Yeah, they may not know who Corey is.
Yeah. Excellent. Cool. And it's my hopes that in our conversations, I've lost enough money that the average American would spend 10 years to make. So there's a level of humility to that education, right? So the more that you're able to have conversations like this and small groups like this, or hit the YouTube, always be learning, do your own research, but I like to say DYOP or DYOM, do your own prayer, do your own meditation, use discretion in the marketplace, and just what you procure in the world, your wealth, when you give it out, that's your energy. So, we'll talk about different coins, different opportunities, and where you put that energy, that's where it is. So, just remember it's an extension of yourself, so do it with honor, to the best of your ability. This is the cryptocurrency market, and what's unfolding is the gold rush of our era. And I like to say, the old California gold rush, the gold, it's in them there hills, Jethro. Let's go and get it, but this time the gold isn't up in the hills, right? It's in the intangible. It's in the mindset. It's in the hearts of the individuals. And if they can bring those visions to fruition through blockchain technology, cryptocurrency, then y'all get to have a part in that, and everybody gets to reap the rewards of a new world, a new kingdom.
Yeah.
You guys are not alone. There are small groups like you guys all around the world wanting something better, wanting a new earth, a new world to bring Christ's kingdom. I know people from all different religions, and the thought process is the same. How can we utilize cryptocurrency to make and blockchain technology to further the goodness that we can create? And I think that is most admirable.
So I think one thing that would be helpful is, because I think you mentioned blockchain a few times, I think it'd be really helpful just to kind of explain what blockchain is, because as we think about blockchain, it actually becomes far more than just a part of the financial systems. We're talking about smart contracts and all these other different areas. So maybe just kind of do a real quick, what is blockchain? Especially for those because everything, that's kind of the spine of what all these other things are resting on.
What is cryptocurrency, right? Cryptocurrency is this number that goes up and down, and people buy it and they hope it goes up, and they pray it doesn't go down. But it's based on the coding. Is there any web developers here or software developers? All right, so cryptocurrency behind that number that goes up and down is the ability for peer-to-peer transactions to occur, or business-to-business transactions to occur, as you find in XRP, or business-to-peer or peer-to-business, right? the ability to facilitate transactions worldwide. And if the blockchain in question, like XRP, can do it with integrity and consistency and efficiency, then they become the more popular token, they become the more invested in token, and the price point goes up. But what is being created, when I went from the guy that just rides the highs and lows and plays the market to a much stronger vocal proponent of cryptocurrency and what it can do, is when Ethereum really took root. And we followed Ethereum from $100 up to 3,000 on that first run, or 2,800. And but what Ethereum really did was it created land. Okay, and what the blockchain does.
What is Ethereum?
Ethereum is a cryptocurrency. So you have Bitcoin. Everybody knows Bitcoin. I like to say Bitcoin's like gold in the marketplace. Right. If you're going to go down to the village market, you're not going to carry all your gold with you. It's hefty. It's hard to change for peer-to-peer transactions. It's better as a store of wealth, right? Ethereum is more like silver. You take silver down. It's faster. It's lighter. It's good for business-to-business transactions because the gas fees can be a little high. And then there's smaller tokens like XRP or Tron. That's like the copper in the marketplace. Those they're cheap, they're fast, the fees are low, so the ability to conduct business from a peer-to-peer standpoint is a lot quicker.
Cheap for now.
Cheap for now. Yeah. Well, the fee structure. So hopefully, the fee structure is what's important. The price could be $8 million or $8. You're going to own a fraction. Fractal ownership allows you to just have skin in the game. And so what is important after that is the tokenomics of a coin. Okay, tokenomics is a term you have heard, but it refers to the ins and outs and nuances that a coin stands behind. And you'll find this in Write Tokenomics down. If you haven't written it down, write tokenomics down. There's plenty of research on YouTube or any other resource. What that'll refer to is what's called the white paper. Every coin itself it should have a white paper that goes through its priority lists and its capabilities, its software developers. It should have access to their leadership via LinkedIn or whatever have you. And I'll go over that later too. And it'll go over their fee structure. Like cryptocurrency, when it's transacted, can either be a fee that goes to what's called miners. Write down miners and put that in your queue of things to look for. And or it can be burned and put into when a coin is burned, those fees, that means that portion of coin is going to be taken out of circulation, which is good for all current coin holders, because as a current coin holder, you bought at $1, knowing that the total market cap of a certain coin.
Sorry, I can't get the dual picture on there, so you guys can watch.
Yeah. Well, it's time to buy right there.
So here you see the coin market cap is one of the most, is a very great information source for information. Okay, coinmarketcap.com.
Yeah.
In CoinMarketCap, you'll get the total daily market cap. And when I say market cap, that's the value of the US dollar that's currently in either the economy itself or a particular coin or group of coins. All right, and then CoinMarketCap will break it down for you. So we hit XRP, and it lets us know that we have a total market cap of $123 billion, right? Great, what does that mean? Well, there's $100 billion in max supply. Well, that doesn't make any sense, guys, because it's $2.13. Wouldn't the total market cap be $213 billion? No. That tells you right there, that discrepancy right there tells you that there is a total supply in circulation that is different than the total max supply, right? The market cap of any particular coin will be the value, the current present day value of that coin, and multiplied by the coins in circulation, all right? That means that any coin that is added to the circulation would in effect lower the price, but it also means that any coin burned and taken out of circulation would increase the price. So, like for instance, crypto.com. Coinbase.com is great, Uphold is great, Crypto.com, when it first came out, I jumped right in and I bought a bunch of CRO because I investigated their white paper and I looked at their community and I looked at their innovation of technology, I looked at their industry, the industry support, and I looked at the social aspects of it. And they hit all 5 for me. Those 5 pillars for me helped me determine whether or not I'm going to invest in any particular coin.
What was the name of that again?
That one is CRO, Crypto.com.
Crypto.com.
This exchange created a CRO coin. So I bought it at like 2 cents, and I bought a bunch of them. And then knowing that the value of the coin would appreciate due to the burn rate established in their white paper, and it went up to like 56 cents or something. So it was a good like 5 months. And I sold off a bunch of it, bought a bunch back for holding for other purposes. So burn rate is an important term to know and understand. When Crypto.com and other business models offer what's called staking, it's definitely something to look at. Because in a staking environment, as long as you are staking with either the reputable business, an exchange itself, or pretty much those two. What they offer you is the opportunity. What you're saying is, I'm going to purchase 1,000 coins, and if I hold them today for $1, so I have $1,000 investment, and if the price goes up to $2 in a year, then it's worth $2,000. But if I agree to, knowing that I'm going to hold it for a year regardless, if that's my strategy, then consider staking. Staking can be at a 6-month interval, 12-month, 2-year, 5-year, whatever it is, and you and that business or the exchange itself will offer you a rate of return that's acceptable to them. So you could say, all right, well, I know I'm going to hold this stuff for a year anyway, so I'm expecting big things, but it's going to take a while. So I'm going to go ahead and stake this. And while it's being staked, Crypto.com or this whatever you're using will give you 12% APY. So now you know that I'll have 1,112 at the end of the year. So I'll try to turn that $1,000 investment. If it goes up to $2 instead of just $2,000, then it would be worth $2,400.
So that sounds a lot like what you were talking about with this options on the stocks. Remember when you were talking about that, and the last time we were talking about stock options?
Yeah.
It sounds similar to
Similar
that.
to all dividends.
Dividends, yeah. Not so much options, but dividends.
Okay.
Yeah. But it happens. It doesn't happen naturally. It happens at the result of you agreeing with partnering with Crypto.com or another exchange to.
Some pay you higher than the other.
Yes. Yeah.
So
Does Uphold do that, I think?
I haven't looked at Uphold in a while. I kind of got like upset with them, which they didn't seem to mind, but and that's it, man. FOMO. Everybody who doesn't know FOMO? Just chicken wing. All right, I see a few. All right, fear of missing out, right?
That's a stock.
Oh no. But the fear of missing out is largely it's also why you guys are here, right? You don't want to miss out, so you're going to show up and learn something, right? But when that FOMO happens in the marketplace and you start trading or investing with fear or uncertainty or doubt at play, your perception is changed. So you're quicker on the knee-jerk reactions. And to get wrapped up in emotionalism while you're trading or doing your research blinds you to the truth. Right? And that can happen on the face side too, guys. Because there's a lot of sharks out there that know that conversations like this are happening, that people are gathering like this, right? Make sure your investment, your actions align with your intentions. Because the discrepancies is your distractions and your emotions, where they clouded your thinking. People will jump in and they'll get you on Zooms and they'll be talking God, spirituality, New World era, all the right words. But if we take their word on face value without doing the proper research, looking for those 5 things I talk about, you could lose all your money.
One of the things that I think is important too is, especially when you're talking about the exchanges, is a centralized versus a decentralized exchange. So your exchanges, where he's talking about, are your Uphold, your Coinbase, all of the places where you actually can go and buy the currency, right? And some of them, like especially like Lobster's a decentralized one. That means there's no oversight, no governance, which means you are in complete control, but it also means anybody can go and put a coin on there, call it a coin, and start selling it. There's no oversight to it. So that's where I think a lot of times people sometimes get stuck. Not always, but sometimes people get stuck, especially on decentralized, because they, like if you search XRP, for example, on a Lobster wallet, you will see like 100 different XRPs. Well, there's only one, but sometimes those can be.
Or there might be an XPP,
Right.
because the criminal knows you're gonna mistype it.
Exactly. So you do have to be kind of a little careful on the exchanges, but I think where you're talking about like fear of missing out, to your point, like know what you want to do and accomplish and stick to that, right? Like don't sell when it goes bad. Don't try not to buy when it's super high because you want to be a part of it, right?
Yep.
Yeah.
Yeah, when it comes to an early investor, please stay with Coinbase, Crypto.com, or Uphold, or some other one that's very heavily tied to the US
Robinhood.
regulations.
Yeah, Robinhood's a good one. Well, they're also they're centralized.
Robinhood's fine, it's a centralized exchange. The reason why I shake my head is because maybe they've improved their like, when Robinhood came out, it was great. It's a fun little swing trade, trend trade, gambling scenario, but I'm not gonna day trade off that account because I don't know what the real slippage is with these guys. And I'm not gonna hold any cryptocurrencies and think that I own them because I know what they're doing. They're showing you a GUI, graphic user interface that says you just bought something, congratulations, give me $5 for the transaction. Nothing happened on the blockchain. They've got 1 million of these Bitcoins or 1 million of these XRPs sitting in the back row. They don't have to move a thing. They don't have to take a single fee. They know that the odds are in their favor that you will make a stupid decision and sell low. That's it. And in terms of cryptocurrency, there might have changed in the past year or so, but there were no real safeguards against them doing that. Anybody astute in the stock market? Really good stock market people? In the stock market, if I go to Interactive Brokers and make a purchase, there has to be a paper trail that leads back to the New York Stock Exchange or NASDAQ to confirm the purchase was made, and it has to be in the second level trading. It has to be when you've got the first layer and second layer of the trading, where there's a term for it. Anyway, but when you're dealing with cryptocurrency exchanges, they necessarily don't have to do that. And there was I think that's what happened with CFX and a couple of the other ones that were up for indictment. But so my point is, use the exchanges, but Robinhood, use it with a little bit,
A little bit more care.
a little bit more care. Just know that I got play money here because I wanted to see what this coin would do. And it also gives you the ability to transition between cryptocurrency and stock exchanges with ease. So that's fun, right? Coinbase for a new person is what I would definitely recommend because of the educational wealth they have and they offer. You can log into Coinbase, you can make your account, and then you can learn about cryptocurrency, learn about XLM. And while you're learning about XLM and what it does and what it is, they'll pay you XLM. Right. You'll get like 10 XLM. You can go do it with XRP. Yeah, I know what XRP is. Well, good. You should pass the quiz pretty easy then. Do it. You get a little XRP. And then what happens? Those are all early adoption coins. New ICOs are what are promoted in those questionnaires and stuff. And in a year and a half, that little $4 you made might be worth 48, 50, 60. I think I did XLM and it went from like cents to $65. It's fun, but learn while you earn. Yes, sir.
Is it recommended to have more than one like Coinbase and Uphold? More than one? Do you need more than one platform?
Mileage may vary. You guys are like me. I have a life. I have a real world life, I have friends.
There you go.
You do not want to go down the rabbit hole that I went down, which was complete absorption. I had Uphold account, Crypto.com, I had Compound DeFi assets, I had investments in 18 different active projects, and it will consume you. You know, there's no time for anything else, man. And you're
Right.
tied to this screen that's absorbing your soul, and it's like it's got to be an end to it. So mileage may vary. Do what you can handle. You know, I would stick with one, and Crypto.com, Coinbase, Uphold are all pretty consistent. Yes, sir.
What would you recommend as far as like a digital wallet or?
Well, I'm not a financial advisor. I ain't recommending no, especially if that thing's hitting record.
So when you say.
What's the question again?
Well,
When you
like,
say
to make
digital
sure that your
wallet-
security keys don't get taken by
Yeah,
someone.
your security keys, you need any, so let's talk about that. The exchanges are the exchanges, right? You put your money, you send your fiat currency from the bank to the exchange, and they hold the coins, they give you an interface that says you own the coins, and that you're holding them. But, you don't have a 12-word seed phrase to worry about. They've got everything. If they are hacked, you might get your money stolen. Right now, Bybit had a North Korean hack, and I think $1.6 billion was taken out of the market or something by these hackers. That only happens when can happen in the exchange. When you remove your cryptocurrency from the exchange to what he's talking about, personal anonymous wallet, a digital wallet, a cold storage, you'll be issued a 12-word seed phrase. That's a lot of words. It's like 1,000. You know, let's say there's 1,000 words in this database. So a 12-word seed phrase is 12 words that are given to you on the screen. Don't take a picture of them. Write them down. Put the piece of paper in your safe, in your fireproof safe. Do not lose it. It is the only way that you'll ever gain access to the portal that is your wallet. Because your wallet is a real asset on the blockchain, but only accessible with that seed phrase.
With the keys, yeah.
So, what the 12-word seed phrase, if there's a,
I don't know what you're pointing.
if there is 1,000 words in the data bank, then it's a 12 factorial permutation, which means the amount of possibilities for this arrangement of words with a 1,000-word bank would be 1,000 times 999 times 998, 97, 96, all the way down to a factorial of to the 12th factorial. It is an insurmountable number of combinations and permutations to gain access to that.
So let's back up just
So
a
that takes you
little.
off the internet, basically.
So
That takes you off of the
Yeah.
exchanges, and it now gives you total control of your assets. It does not take you off the internet because this is cryptocurrency, blockchain technology. You got the ledger.
Well, yeah, I was just gonna kind of like go through just a couple things, just for orientation, because I know sometimes we throw a lot of words out there, and it especially gets really confusing when we talk about ledgers, and then you've got the cold storage, which is named ledger. It's not ledger. So the ledger, think of it, and I put the little graphic of the book, like think of it as if you buy crypto and somebody wrote it down in a book, okay? That's the ledger, that's where the blockchain lives. So anytime you buy an asset, it all is recorded on the ledger. That is an unhackable, secure, it's owned by, that is the blockchain, okay? So that's what ledger is. There's a public ledger and there's a private ledger. Most of us are working with public ledgers. Private ledger is often used for like organizations, that's like a lot of financial institutions, when they're buying XRP, they're buying off of a private ledger. We talked about the exchanges, so we don't have to talk too much more about that, but think of your crypto exchanges as the bank. So like our bank account is at Chase, kind of the same thing, except instead of holding USD, it's holding my XRP, it's holding my XLM, it's holding all the crypto that I have purchased, but I think of that as like your bank account, okay? and we talked about centralized and decentralized. Essentially, go centralized, cause there's at least some oversight, there's some, it's a safer place, to be. But then when you start talking about, okay, so I don't, like you made say, like if you're thinking about your cash, I don't want my cash in a bank. That worries me. I would rather have my cash in my safe at home. That's when you're talking about using your crypto wallets, okay? There is hot storage and there's cold storage, okay? Hot storage is your things like Uphold has their vault, right? It's in a safe place, but it's still not 100% in your possession. Does that make sense? Then you've got cold wallets. That's what he's talking about with your seed phrases. So like these are our ledgers. You've got something like this that looks like a little USB. We also just got this, it looks like a little cell phone. It's called the Fraley stack. But essentially all of the digital codes that go along with what we own are on these ledgers. We have some in the exchanges so that we can move them around easily and kind of, you know, buy a little here, move those. And then we have some that is on cold wallets so that we know that it's not on an exchange. We have full control, full ownership of it. The danger of these, just so you know, is if you lose your seed phrases, if you lose your wallet, it's like losing your physical wallet. If you lose your wallet and you got cash in it, it's gone. Same with this. If you lose your seed phrases, if you lose these physical devices, it's gone. So it has to be very secure. So I just kind of wanted to step back a little bit because I know we were throwing a lot out there. But when he's talking about seed phrases and being able to access it, that is a part of the security that goes along with your cold storage wallets.
This is quite possibly the first time in your life you actually had 100% physical control over your money.
Yeah,
You don't realize that, but you'll realize it.
you're kind of your own bank.
Mm-hmm.
Exactly.
You become your own bank. When you put $1,000 into the bank, they immediately take $900 and they show you a screen that says you have $1,000. They're well within their rights, it's all legal, and they immediately start making loans and money and all that stuff. So, but this time, when you put $1,000 worth of your crypto into those wallets, it stays there until otherwise directed by either the owner of the 12-word seed phrase or the custodial arrangements they've made with the businesses or brokers that it's tied to, which opens the door for an amazing amount of opportunities and potentials for crypto that might be over the pay grade today. It's fun.
So
I've got accounts with custodial access where the broker's able to take money out, make the investments, spot on trading, and then my little chart just shows up.
So what are the 3 to 5 cryptocurrencies that you're most excited about right now?
Well, I put some back. All right, the ones I'm most excited about would be Ethereum, Algorand, XRP, of course, and Ethereum, Algorand, XRP.
Bitcoin.
I don't care about Bitcoin. Bitcoin's cool and all, but I've ridden it from like $300 to 3,000, then from about 6,000 to 15 or 18, and then I went out of it, got back into it at 20 up to 33, and we ran an algorithm from 20 to 33, so I turned like half of a Bitcoin into 2 Bitcoin in 4 months, so that was cool. I turned like 10 grand into 3 Bitcoin. It's about $100,000 in 4 months. That was nice. And but then I got out of it. I went in to go do something else. Like I said, gold, Bitcoin is a store of value. It's cool. I do have hopes that it goes up, but you know, and even Robert Kiyosaki said, okay, so the creator of Bitcoin and this grandfather of cryptocurrency is a gentleman or female by the name of Satoshi Nakamoto. Robert Kiyosaki has always been talking about, allegedly, yeah. But his or her most famous quote is, in 20 years, Bitcoin will either be everything or it'll be nothing. And it's still anybody's game. It can be everything or nothing. The money we put in, we need to invest knowing that we may lose it, you know? So to stay diversified and have a strategy is most
Crucial, yeah.
yeah, I can't stress it enough. And I also can't stress enough that when you guys are buying this crypto and selling it, liquidity is gonna be the issue. So when people look at cryptocurrency and say, oh, well, it was at 30 cents and now it's at, well, like XRP, oh, it was at 30 cents and then it was up at 350. I could have 10x my money if I'd only gotten in. I'm sorry, that's not the case. Liquidity would have been an issue, slippage would have been an issue. You wouldn't have bought at the lowest low you see on the screen, and you surely wouldn't have sold at the highest high. It's just not gonna happen. So to even let your mind entertain that and turn it into a fact is foolhardy, because you embody those negative emotions. And by embodying those negative emotions, you take that on your daily life, you beat yourself up through the process, and then the next time you come back to make a trade, you trade with that weight that you've been carrying and adding on and stacking. Especially if you don't, I mean, everybody here prays, so we're good. We all pray, but you know, if you don't give it to God or give it to somebody else, those negative emotions, you're gonna hold them, they're gonna stagnate and build, and you'll end up, your next trade will be made with that. Oh, it's at a low, I'm gonna buy, and you know. Yeah. You'll go against your strategy. Everybody's strategy is gonna be different based on their own risk tolerance. There's a lot of good little quizzes to determine your own risk tolerance. Your retirement investment broker almost assuredly, when you log into it, should have like a little "Who am I as an investor" quiz. I know my Vanguard account does. You get to find out like, okay, I'm an aggressive investor. I never knew that. I was like, okay. Yeah, she knows. She's a risk taker right there. She's like, yeah, that's me. I come in soft, but I hit that market hard. I got you.
So I have a question.
Yes, sorry,
We
yes.
were talking about the XRP, Ethereum. I have a friend of mine that's really into Doge. I have not bought any Doge coins.
Stop. This isn't that conversation.
What?
We're not talking about Doge in here.
Okay.
No. Come on.
No, just asking about the coin itself, not Elon Musk.
Okay.
You know.
So no, there are
It's at 20 cents or something.
There
like
are
that.
5 main things that I do my investments based on. It's going to be does the coin answer a question in the marketplace or in this reality? Is it an innovation, right?
Purpose.
You know,
Does it have utility?
does it utility? You know, does it have industry backing or government backing? Right. Social media presence, does it have the community? Is the leadership available, open, and transparent? And then the tokenomics, very important. So each of those 5 main topics, if I can go into my deep dive on that coin, this is before making an investment. Don't make the investment, then come back to it. But if I can do my deep dive, so let's do it with Doge. Let's do it with Doge. Does it have utility in the marketplace? Absolutely not. It receives a 0, right? Does it have a community? Absolutely yes. It receives a 5. Does it what was that one? The
Open and transparent.
Yeah.
open and transparent? It's a shoddy leadership that's just they've struggled their whole time. The only reason they got resurrected was because of Elon Musk support and the fun of it. So it gets a 3. You know, who knows? Right? The fact that the leadership is struggling doesn't necessarily indicate a bad coin, as long as they're willing to hire new software developers and the cryptocurrency itself is amendable and you can increase security as you go on, like Ethereum. Bitcoin you can't. Bitcoin's a stuff. That's why I hold money in Bitcoin, but I'm not necessarily well invested in it because no one's there to augment the code itself, which means as quantum technology increases and AI hackers come into play, we won't be able to build a better Bitcoin. I can build a better Ethereum. Does that make sense? Mm-hmm. I can strengthen the structure.
Ethereum built on base, or doesn't it? It's tied to Bitcoin, though, right? So there's a relationship between Ethereum and Bitcoin, right? Or am I completely.
You might be right. So Ethereum acts as its own cryptocurrency layer 1 technology. So I don't think that's the case. What happens a lot is because it's not up there anymore, but in the coin market cap, because Bitcoin moves, Ethereum moves, and all other coins follow suit. Those are the two primary coins with in terms of market cap.
Yeah.
So they're
Did you want to?
causation versus correlation. Bitcoin goes down, Ethereum goes down. Doesn't mean Ethereum did anything wrong. It just means the whole market is currently in their dip. And crap. So we're looking at Doge. You know, by looking at those top 5, I've come to the realization that this is a gamble.
The meme coin.
It's a meme coin.
Right.
It is a gamble. That doesn't mean, that means long term. I need to take investment out of my communication when I talk about this coin. Anybody that is holding Doge is not holding an investment. They are gambling. It's a good gamble. You got EOS, you got all this stuff. But watch somebody when they talk about Doge. Their veins start popping out, their eyes start glassing up, they start talking crazy on Mars. Like, hold on, buddy. We are strong investors, you know, increasing the wealth of our kingdom. Keep your feet on the ground. It's fun to talk about these things, but you really gotta stay, like you said, with discretion, right? And DYOP, do your own prayer. But yeah, so Doge is fun. I own Doge, I ain't gonna lie. But I own it incrementally, knowing I'm gonna gamble. I own it only when I think it's gonna swing. And honestly, as I become a more, I wouldn't say mature investor, just sore investor from all the pains and aches and losses I've occurred, I don't want to put my money, efforts, and energy into anything that isn't completely open and transparent. Run with integrity and shaking up the market in such a way that it opens up hearts and minds or anything, right? I put $85,000 into blockchain sports. I know I've met the leadership, I've walked with them, I've got faith in them. The money so this is what cryptocurrency does for me that is outside of what you guys are getting into it for. The ability to conduct business is one thing, but what kind of jobs you guys have?
Retired.
I'm in sales.
You're in sales, okay, yeah.
Generators.
AC, generators, okay, generators. I've got a generator that costs $10 million, right? And the output for it is going to produce $2 million a year for the next 20 years, right? I can't afford it though. But you guys see a generator that you can't afford. I see an opportunity that with cryptocurrency I can digitize and tokenize that generator. I turn that $10 million generator into 10 million units of what's your last name? Ladley bucks. So Ladley bucks, 10 million Ladley bucks. And Ladley holds 4 million of those out of the total market cap and sells 6 million of them. All right. Sells them at a price point of 1.2 per piece. So when he sells all 6 million of those Ladley bucks, he's got $10 million to buy the generator. He's still holding on to 4 million, and the project gets to launch. Those Ladley bucks can be purchased on any open exchange around the world. I don't have to have the sales force I needed, I don't have to go to a Shark Tank to try to do anything. It's just an opportunity that's present and available around the world for anybody to take. That includes people in Africa, Japan, wherever. And it's just the opportunity for a redistribution of wealth is incredible, which is why the U.S. hates it so bad, which is why it's so heavily regulated right now, which is why the current powers that be are hopefully they're going to soften those regulations, right, and open the door. I've got, I'll be honest, guys. I said before, I've lost 10 years worth of the average American's income, right? Significantly more than that still in the market, right? So that's why I'm not crying and threadbare. But 3 of those accounts, due to the current previous administration's regulations, are under they call it investigation, right? We did nothing wrong, there's nothing done wrong, but because we didn't meet the absolute regulatory standards that they were pressing in, because they were trying to maintain control of the marketplace, those funds are frozen for 6 months to 2 years.
Mm.
But Dr. Eric has met with RFK Jr., so one of the guys that runs blockchain sports for us, and we're going to see a softening of those regulations, and then we'll be able to actually put these miracle companies into motion again. So it's pretty cool. It was like I got out of cryptocurrency for like about 1.5 years, 2 years, just because these guys are crazy. I won't get political, but.
What other questions, yeah, Tom?
So this is a very newbie question, but I have only an Uphold account right now. I have an Uphold wallet, which is their. It's
You
not
know,
a-
Uphold Vault? Which
Yes,
I
I
don't
do.
know enough about Uphold Vault.
Yeah, yeah,
itself.
that's what I was gonna say. The
Yeah.
wallet and vault are terms that are kind of confusing, but the wallet is not as secure as the vault. But that's all I know right now from Uphold. So my procedural question is, just walk me through what you do to take some of your holdings from there into cold storage and then back if you want to transact them or cash them in some way. What does that involve?
Okay, so you'll log on to your exchange, right? And when you want to take the money off of the exchange, you'll send it to what's a personal wallet. It'll be an app on your phone, like Vault or Exodus or whatever. There's several of them. And you'll send what you send. You have to whitelist the new address that you're sending to. So you'll tell the exchange, hey, I want to be able to send my cryptocurrency to this address, and it'll send you an email. And it'll say for security measures, it'll say, hey, you've requested to whitelist this address. Is that correct? And you'll hit yes. And then this address will populate on your exchange. That way you'll have buy, sell, transfer, most likely on the exchange, and you'll hit transfer. And then it'll show you the whitelist addresses that you have. And this new address, which is your cold wallet or your hot wallet, or the wallet that you have on your phone, your Exodus wallet or whatever, and it'll send the money there. There will be a lag time due to the exchange having to suddenly give you the money, because I still don't know that actually you can. Anyway, I'm suspicious. And then once they decided to release the funds and send them, you can then monitor the transfer of those funds on the blockchain itself. So you'll be able to log into the blockchain, and it'll show you that transaction 100 Ethereum from a wallet address here to this wallet address here is pending, waiting on confirmations. And there might be 20 confirmations in the block. So it'll say 6 of 20, 12 of 20. Once it hits 12 of 20, you're pretty much guaranteed the transaction will go through. Once it hits 12 of 20, your phone will vibrate and your money will land in your wallet. And then you can do with it what you will.
When you say wallet there, you mean that's cold storage?
Yeah, your cold storage.
Or cold storage, yeah.
Yeah. The only thing that I will say though.
I don't use cold storage because I'm like her. I'm hitting the bar and putting everything on it. I take that money and put it back somewhere else, make more.
Both of the ones that we had are Ledger brand, and they have a desktop that you put on there, and it kind of walks you through everything. It's called Ledger Live, and it's pretty user friendly. The only thing I'll say is that if you decide to use cold storage, don't buy it from Amazon, don't buy it from eBay. Go to either Ledger, whichever Ledger or wallet you choose. Go to the manufacturer.
Not China.
Or go
Go
to,
No.
like we went to
So
Best
from
Buy
China.
when we got this one, and there was one that was open already. And I'm like, I don't want that one, I want this one that's sealed, that had never been open. Because if you get them from like an eBay or someplace like that, someone can buy it, put their stuff on there, you load your coins on there, and then all of a sudden now they're in their account.
Transfer to theirs. and
So-
where do you keep yours if you don't use?
What's
Cold
that?
Wallet? Where do you keep yours?
I'm a high risk investor.
You just roll it over.
I just put it somewhere else. Yeah, she can't stand it. She don't know what's happening next.
So you just have it in the exchanges? Is that what you mean by
I
that?
don't keep it in exchanges. So I invest in projects that I believe in. I want to see certain projects take off. I want to see certain AI projects take off. I want to see certain security guys take off. So sometimes you send your crypto that you made to a project where coins are awarded, and there'll be a lag time, right? The tokenomics of an event. It'd be like purchasing an IPO, but you're not able to trade it on any open exchange yet. So in an IDO or ICO environment, yes, you hold the coins, but we need to find an exchange for them first. So my blockchain sports is an Atla coin. It's a layer 2 technology. It's got great use case and everything. They just can't get through the current U.S. regulations. So they're working through that. And once they do, then it'll be open on Coinbase, Crypto.com, and whatnot.
So basically, it sounds like what you do is kind of like as if we were to go directly to XRP and buy it directly. You're buying it, you're getting the coins directly from the coin creator, for lack of a better term, right?
Yeah.
I mean,
And when,
that's
when
like
you,
a super
when you do
simple
that,
one.
you get this 12-word thing at that point?
No,
And
the
you-
12-word seed phrase is created, that is your personal account. There's multi-coin wallets like Exodus, Trust Wallet, and a couple others where when you receive your 12-word seed phrase, a wallet address for every type of coin that's traded on the market will pop up, and then you can use those wallet addresses to receive money from the exchange and conduct your business or whatnot. So like I'll take the money I make from one of my other algorithms, send it to my Tron wallet, and then I'll make an investment in some opportunity through the Tron blockchain. Cryptocurrency for me isn't so much. So imagine you're in an ocean and you're a boat floating on the ocean, and you look at an iceberg. And the iceberg is the stock market and the cryptocurrency market, right? It's got ups and downs, and you're praying it goes up, you're hoping it goes up, and you're praying it doesn't go down. Below this waterline, and people will tell you, oh man, imagine if you'd invested in Amazon and made 20,000%, or Google made 50,000%, all this shit. And they're not talking about above the waterline, because above the waterline is post-IPO. Below the waterline is where those investors had a chance to catch those massive gains, right? So they invested at the very beginning when it was still in a garage. They reinvested again when it became a bookstore. They reinvested again when they decided to go online, and then it went public or whatever. So I just like to play my cards close and stay below the waterline. It's very high risk. You lose everything. Lost $400,000. So it's not a big deal.
No big deal.
No big deal.
No big deal.
Tom, if you go cold storage, they send you good instructions to help you, walk you through it.
So that little cold storage device, it must hold more than 12 keywords that have to be in order. It must hold, because you could do that
Don't
on a
panic.
piece of paper and put it in your safe.
Still
That's what I'm trying to grasp. So is it the big, long, indecipherable blockchain number that's being held on that little cold storage device?
So that cold storage device that is accessible only by that piece of paper that you have, the 12-word seed phrase, gives you access to what's called a multi-coin wallet. And each one of those coins will have their own unique wallet address. That wallet address is public information. It's like somebody having your address on file. So they can see where you live, but they can't go inside your house.
Right.
The keys to get inside the house are the 12-word seed phrase.
Yeah.
Okay. So even though you're in cold storage, I would be able to see that you're holding 100 Bitcoin.
You would or wouldn't?
I would,
You would.
because
Because it's on the ledger.
that is the which is the beauty of cryptocurrency and blockchain technology, is the open transparency of it all, right? So we like to joke, there's a coin out there that is completely not transparent. It's got some government approval. It's got no market cap, and it's got an unknown amount in circulation supply. Based on our 5 pillars, would you buy it?
No.
Heck no, right? You just agreed not to buy the US dollar. In my opinion, and this is an opinion, I am not a financial advisor or anything. Like when I make my I use US dollars to facilitate immediate transactions that we have to take care of, to pay bills that we have and about a 2-month, what we call prudent reserve. And your spiritual financial guy, what's his name? That goes around the country doing.
Oh, you talking about Dave Ramsey?
Yeah, Ramsey. I think he talks about a prudent reserve too.
Oh.
A prudent reserve for me is 2 months worth of bills. That way, if whatever hits the fan, I still know that I have enough money in the bank to pay for 2 months worth of bills and whatnot. Everything else outside of that, guys, I got into I moved it over to Bitcoin, Ethereum, Tron, and we make our investments. Bitcoin is a natural hedge against inflation, which means as the U.S. dollar loses value, Bitcoin increases. So, you like buying gold or silver also, right? Which I'm sure you guys have
Right.
plenty of talks about real estate and silver as being natural hedges to inflation. So, you guys.
So let's do one more question before we talk about trusts.
Well, there's somebody asked recently in our group about, let's say they had Bitcoin, they made just $1 million, or they had 5 million, they wanted to cash out $1 million. They were asking.
They need to call me.
Uh,
They need to call me.
yeah, but they were wanting to cash, little cash. My
They
first
need to
question
call.
is why would you do that? But they wanted to cash.
Does he?
You could go to a bank. Who was that?
Don't go to a bank, come to me.
Somebody on our thing was asking, I think Steve.
Yeah, Steven, whatever it was.
Yeah.
that's right.
Give him my number.
Yeah, he couldn't get the money.
We
Couldn't
have
get
cash.
the
It's been
cash.
like a year and he hasn't got his money.
But to me, why would you wanna get cash?
No, I have cash. Like, we'll make the transaction. Have the cash. We'll come. We'll have Navy SEAL on escorts. Facilitate the transaction. Yeah. We call it an OTC transaction.
Over the counter.
Over the counter. It stays off the exchanges, so it doesn't influence the price of the coins. And we're looking to purchase anything from 10 to 500 Bitcoin, and we can handle increments of 20 Bitcoin at a time. We got a Navy SEAL security detail on hand that can transfer.
So you don't really go to a bank, a tier 1 bank or whatever, you
No.
wouldn't wanna do that, right?
No, I'll do it right. We'll do it face to face wherever they want to do it.
And I think, Joe, you had asked that also the other day.
I'll establish the safe
About
house.
getting a cash.
Yeah,
Yeah.
we'll come see you.
What's up? Any other questions?
Yeah, my question was about liquidation. My question, I guess, is about liquidation. So let's say, you know, whatever of these coins, a lot of us are really excited about XRP, but whatever. Let's say it goes to the moon, and now all of a sudden we're rich, and now all of these people want to cash out and actually,
You're not rich, but your unrealized asset value is
Right.
high and you're excited.
right.
Come see me.
And so now we,
I hate it.
now all of these people now want to cash out and make their money.
Sure they do.
So,
Just like any other stock,
right.
any other pump.
So I guess the concern is,
Liquidity.
yeah, like, are we gonna be, how are we gonna be able to cash out and make money?
As long as there's liquidity in the marketplace.
Yeah.
And a couple of the guys I'm working with are, like, we offer liquidity to several different exchanges on a transaction basis. So, Waleed, he does the software stuff, we put the Bitcoin in there. And all we do, we don't worry about whether or not Bitcoin's going up and down. We got $200,000 over here offering liquidity to 4 different exchanges on a transaction basis. So basically, we're just holding up the money saying, you're good, then we take the fee, then we go to this exchange, like, you're good, and we take our fee. So the liquidity occurs in the marketplace with little vault houses like ours. So,
I think one of the
but
things
you
that-
can't control slippage or the lack of a buyer.
Mhm.
There's no regulation that says if no one's wanting to buy, or no one is willing to buy what they're willing to sell at, we're gonna go ahead and help them out anyways. Yeah, but and that, I don't think that occurs in the stock market either. There's some safeguards in place to prevent.
There's always a buyer
Yeah.
in the stock market.
Right.
In crypto, probably there's a buyer, but.
But it's user based, so the more users in the exchange, on the exchange itself, the more opportunity for liquidity. Yeah.
But I also think too that one of the things about crypto and one of the things that we're kind of, at least, this is me personally talking about how I'm thinking about it, not necessarily like a strategy, but I'm starting to think of crypto as an asset, like real estate. So instead of liquidating it into a fiat currency or something like that, how do we leverage our asset to do other things? Cause that's the way I look at it is, and I totally get what you're saying, like liquidity, how can you, once, you know, it hits 10,000, okay, sweet, we're out of here. But at the same time, you actually have a physical asset.
Mhm.
And so that's how I'm starting to try to think, at least personally, is how can we be wise and use it, not just to like exchange it into cash, but actually use it now as leverage for other things.
Right.
So I guess it, like if with stocks, I guess the difference between stock and crypto is like with the stock, you can't buy anything with that.
Right.
You know, you're exchanging that. The theory is
No, but you can put it into some level of trust and take a loan out against it
Yeah.
as an asset class, which is basically what she's talking about with DeFi.
the theory is though
Yeah.
that crypto would be able to be used as actual currency,
Exactly.
and then you could utilize that.
What's that too?
Right.
Yeah. And it's that too. You can pay. I can pay for crypto with anything. I bought one of my Harleys for one Ethereum when it was like $500. Just I rolled up, waved my phone, rolled out. Well, she dropped me off. Yeah, so we drove up. Dropped me off, and I rolled out.
So what you were saying about that though, about kind
I
of
didn't do nothing for
about
that theory.
leaving it there versus getting the US dollar for it, which sounds great until, you know, it goes from $3.50 down to $2.13, and then you lost a third of it.
Yeah.
Whereas US dollars,
Oh,
you would not lose a third of it.
Your verbiage.
Right.
So
Okay, so the price went
You
down,
make-
your value has gone down.
right. Well, if you make
You have the same amount of coins or tokens, but
if you make the decision to make a sale based on the current value, like let that be it. If you're hitting sell on the exchange or buying the motorcycle, let that be it. Do not look back. Dante's Inferno, the ultimate contrapasso, the seventh level of hell. A man was destined to walk throughout eternity, forever looking backwards. Right. So yeah, don't, because you'll eat yourself up or
yeah.
Like the pizza guy that bought the Bitcoin, he still to this day is happy because he was able to purchase pizza with Bitcoin that day, even though it's worth $1.2 billion.
What was it? Was it 10,000 or 100,000 Bitcoin for a pizza?
Yeah.
But the other guy that.
But I do hear your natural fear, your concern,
Yeah.
which is why oftentimes the investments that we are in take the cryptocurrency itself and basically stake it or offer liquidity to the marketplaces to get transactions to increase the Bitcoin count. So while everybody else is holding 100 XRP, now I've made 125 XRP. I'm willing to not freak out about a 25% slippage, and I'm very excited about any viable increase.
Okay.
Does that help?
Yeah, so my thought was
Sorry.
I have XRP, but it's just there because I don't know, I could be
Well, that's
wrong,
good.
but I think it's gonna go. So I'm just like, it's there. I'm not trying to take anything out of it. I'm just leaving it, pretending like I don't even see it right now.
Yeah.
Even though the market has gone up and down just in the last couple months, everybody thinks it's gonna go to this, and then it doesn't, and then all that kind of stuff. My thought is 5 years from now, with that, but
So turn the TV off.
Can you explain why it does
Okay.
that? Why, a lot of people don't know why it's so volatile right now.
Oh, welcome to cryptocurrency, guys. This is the
Right.
wildest ride you're ever going to be on. It's like you watch it's up and down. It's crazy.
Like you
90%. Bitcoin farts sideways, and everybody freaks out. Regulation. People are under it. Like there is a spiritual war going on here, and that spiritual war is manifesting itself in the power struggle for your energy, your money, your finances, and it's the same. It's exactly what's happening in the cryptocurrency space. You never saw it as hard with the U.S. dollar. You only saw it with the U.S. dollar in terms of what the price of eggs was, right? Or the price of gas. Like, what's happening in the economy, right? But here, now that you're involved in cryptocurrency, it's a lot more. What?
It's worse than the stock market.
Or better.
More better.
Is there gonna be a point where that market goes up and down all the time, like the stock market does? But there comes a point where, okay, I've made my $1 million on my XRP, but and I wanna now take out half of that and play with my earnings rather than
Yeah.
put the other $500,000 into some, or is that gonna become the standard currency for the world?
No. So, to me, people look at currency like there's a, we aren't in a world of scarcity, guys. We are blessed. In my father's house, there are many mansions, right? The same holds true for my currencies. Like, my point is the public perception is that there has to be a Doge killer, or an Ethereum killer, or a Bitcoin killer. There only one remains type deal, and that sort of archaic, like narcissistic thinking is just not true. The cryptocurrency marketplace, the decentralized marketplace itself has proved to the world that these coins can coexist, right? Yes, one coin will, like in the short term, in order for one coin to skyrocket up, other coins have to go down because of the lack of market cap. So slippage would occur in that space. But as more and more investors come into the cryptocurrency space, the market cap increases. So instead of 3.4 trillion, now you're talking about $10 trillion. Now at $10 trillion, you as ladybucks trying to sell out is less felt, right? So there's less FOMO, there's less panic in the market, so there's less slippage. Inherently, under that logic, as the market cap increases, the coins themselves would stabilize to some degree. But you're still like, the stock market's crazy, yo. There's stocks going up 125% every day, down 40% every day. Most people invested in the S&P. Most people just invest in the S&P or their own retirement funds and just see a steady increase. Yes.
So you make a really good case of how terrible the dollar is right now, fiat currency, and
But necessary. But absolutely necessary and honored.
Necessary, okay.
Yeah.
But so cashing out XRP or something at a high value to a fiat currency doesn't seem like something you'd want to do. But would there be a scenario in the future where the dollar itself becomes gold backed? It becomes like its own kind of a stable coin, which if you cash out, into that, then you're actually cashing out into something you can buy your pizza and your house with.
Yeah. Yeah.
Is that
there's a couple-
feasible?
I mean, what put Trump at the most risk, he uttered, I heard him say it and I was like, you should not have said that. I mean, there's a lot of things you shouldn't have said, but this, he said on live, on camera that he was going to put the US dollar back on gold. And in my opinion, he should have said that after the election. And he didn't get elected that year, right?
Oh.
I think it was one of the, no, this guy cannot see another term. Because in a second term presidency, the president's always more willing to do what pushes agendas, So they knew, like, well, shit, if he means this, then he's actually going to do it. And that would bring a level of transparency to the Federal Reserve that they don't want.
Assuming the Federal Reserve sticks around.
What'd you say?
Assuming the Federal Reserve sticks around.
Sticks around.
Assuming the gold's there, right? We'll find out soon. More will be revealed.
Okay, so I guess
They
my
rock
question
the
is
IRS.
kind of similar to Tom's. So let's say that XRP, okay, so let's take the stock market. I buy a stock, it goes up. I want to cash out into US dollars, which is something I can use.
Only if there's a buyer, same as crypto.
And so I don't keep that stock because it's volatile. It could go up, it could go down, it could do, unless it's a long-term stock. Okay, with crypto, however, let's say that one of these currencies that we're in, whatever, it goes up. At that point, when it goes up, in your opinion, what is the wisest move to make there to protect our earnings?
I'm not a financial investor,
Yes.
anything, but this is what I do. When I'm riding XRP, I wrote XRP down to an unintelligible price point, or my CVA on it was nothing. Like, I held 20,000 XRP and I didn't, the value, my money in was zero. Because as I noticed that during that time, between XRP and Ethereum, there was an inverse relation. So I would, at a perceived high of XRP, and y'all do your own meditation, do your own research. Don't listen to me. If you listen to me, you lose all your money. But on a perceived high of XRP, I immediately swapped into Ethereum. Instead of coming down, okay, there's the cryptocurrency coins, right? The main ones that you can consider. Then there's altcoins, which are alternative coins in the marketplace. Then there's meme coins, which we're going to stay away from unless you feel like going to.
What are some altcoins?
Yeah. And then there's what we call stable coins.
Stable, yeah.
Stable coins are coins that are fixed to a real world asset or price point. It can be the US dollar, the yen, the British pound, or gold even, right? These stable coins, you can, the main one that everybody uses is one called Tether. USDT. USDT it tethers the cryptocurrency market to the value of the US dollar. That doesn't fluctuate. So a lot of day traders would trade back into the US dollar for stability before they choose to get back into the market, right? Just like you would in the stock, in your stock day trading, you sell the stock back to US dollar before you engage in another stock. Which in the stock market, you have to follow that process. In cryptocurrency, we can exchange the coins. So as XRP is at a perceived high, I exchanged it into ERP, and it carried the uptick even farther. So yeah, we did really good. For like a 3-month period, it was just painfully obvious that's what was going on. As soon as Ethereum would get my focus was XRP. And so as soon as XRP was at a perceived low, I exchanged Ethereum back into it, and my 1,000 Ethereum was suddenly 1,200, suddenly 1,400, and I just kept working it up. Had about 20,000 when I finally sold out of it. And I haven't touched XRP much since, just because I got out of XRP when the minute I heard SEC. So I was like, done. Boom.
So if I transfer one coin to another coin, is that like selling this asset and buying this one so that I now have to pay a capital gains tax on that transfer?
You have to talk to your tax lawyers. Don't talk to me. I'm probably going to prison.
Well, I think there's a
talk to-
concern with people transferring
Crypto.com.
coins all the way up is you're going to pay capital gains tax.
Crypto.com, Coinbase, and Uphold will keep track of all that for you.
I'm not saying that they don't, but I'm saying should you be paying attention to how much tax or anything that is happening there?
Trump's already said that there's not gonna be any capital gains on crypto, any crypto.
It's an asset. The problem is it's an asset. You're bartering one for another.
Right.
So
In the XRP.
That's what I said, like, talk to your tax
SEC
people.
ruling, it was determined, XRP is the only with, legislative authority that it is not considered in a security, it's considered an asset, so it's not treated the same way as the stock market.
So then it would be kind of like, exchanging one piece of property for a different piece of property,
Or like switching your money from US into British pounds.
Yeah.
I mean, it's kind of like that. Okay, well, I know, the other Ken was gonna talk to us about trusts, so, thank you.
thank you guys very much. You guys are awesome.
Thank you, Ken.
Thank
Yeah,
you.
a lot of intelligent questions. I appreciate it.
Thank you.
We won't be able to sleep tonight.
It's perfect when somebody brings up that. Like, if you don't mind.
So thank you.
It's a great one to talk about my 5 pillars and realize you're gambling. And that's good, because at least we know what we're doing.
So I know at one point, a lot of people were asking about trusts and like, when's a good time to do a trust and why you do trusts and all that. And little did we know, we had our very own expert in all things trusts. That's why we wanted you to come and just give us what we need to know about when to do a trust, what type of trust, all the things. All the things that we need to know.
I'm gonna talk about simple trust, because there are some really big complicated things, but everybody hears about making money, okay, the wealth for the kingdom and having money to use for the kingdom and so forth. And I'm gonna change the subject. Okay, we're gonna talk about very simple, down-to-earth, hard facts. What if you die? Okay, anybody wanna talk about dying?
Yay!
That's not the favorite subject.
Get off.
Anybody else need one? Everybody get one? I've got more too, if you need them. And if you'd stay on the first page, okay, Jackie. Already she's on page 12.
Back in the book.
Did you read We Win?
Yeah, we do win, we know that.
So it's funny, but there's no page number.
Let's talk about basic trust, because what I talk about is wills, trust, guardianship, probate, things like that. There are things out there like Rockefeller trusts and waterfall trusts, and if we succeed with what Ken just talked about, and we all have multi-million dollars on our accounts, we'll have to change our strategies, okay? That makes a whole difference in generational wealth and all that type. But for most of us today, we need a basic understanding of, do I need a will, do I need a trust, what is a trust, what's a will, what's probate, what's guardianship, and how all those things work. So, let's look at our little booklets that I handed out. And I just bought another batch of them, and they didn't number the pages. So you're gonna have to look at the page where it says some questions. It's like the second page. Why, like Stephanie said, why do we need a trust? Why do we need a will? What do we need anything for? There's no need to have anything if you stop and think about it. Well, what are the consequences of that? Why do I need a plan? To protect the family. I can make all the money I want, and when I pass away, I don't care, right? Because I'm not here, I want to be with the Lord. But I left my family maybe in a big mess, because everything I earned, we did our crypto, we did our Bitcoin, we made tons of money, and then we lost it all at the end because we didn't protect it. So let's look at how that works. We want to avoid probate. You want to decide the distribution of the monies that you have, not the government. Anybody want the government to decide where your money goes? No. We want to make our own decisions. And we want to avoid and control guardianship. Guardianship, we all worry about what if we die. That's actually the easy part. It's what if I become incapacitated and my family assets are not protected and we can't get to them because we haven't set up a plan. That's the big problem we have. So if you go to the page that says the reality of guardianship, about page 3 or 4, whatever that is, if you don't have any documents in place at all, then the judge is in charge. Everything has to be audited and examined. Doctor exams are required, attorneys are required. It costs a lot of money to get a guardianship established and for somebody to be taken care of. Even though you might have a medical power of attorney that says my daughter, son, brother, sister are gonna take care of me, that can be challenged, and many times it is, because brother one said, well, no, that should be me, and I'm gonna take care of all the assets, because there's money there. And he wants to be able to control you and control the money. So if you have your documents in advance, you've got everything set up, you will have a medical power of attorney, you will have powers of attorney for basic general things, but you will also have guardianship documents. And the guardianship document says that in advance, not having to go to court and get a judge to approve that, oh yeah, this person's gonna be my guardian, so it's already done. And whoever you've put in charge can immediately take care of the assets, take care of your medical side and everything. So that's part of a trust, not a will. A will is only for the purpose of when you die. It has absolutely no value for when you become incapacitated. It's a death document. And it has a value. You can give direction as to where things go and who gets what and so forth. And I'll go through the consequences of some of those up and down on that. But if you plan ahead on your guardianship, you've got everything taken care of. You know who's gonna be in charge. And they have access to all the money. And that's important because otherwise you become incapacitated. Where's the money go? Well, if you have to go to court, the money is now under the control of the judge, and he will decide what kind of care you have and whether you can stay in the state. What if they want to move you to Missouri? You know, because they've got people that, well, the judge may not allow that because it's not in his jurisdiction anymore. So we have to be careful on that. So what are my choices for planning? I can have nothing. I can have a will, or I can have a trust. A revocable living trust is the full name for that trust. Well, most of us have one of those three, right? How many people have a will? Okay. Pretty much the national average. Less than 50% of the people over 65 have a will. Most people don't have anything yet. They haven't. Why? Haven't got around to it yet. You know, just haven't I'm not gonna die. You know, well, we don't know that, do we? We don't know when that's gonna come. Anybody have a revocable living trust? Okay, nobody has a trust. Why don't you have a trust or a will at this point? Just haven't got around to it. It's the same answer. And the trust side of it is even more likely that you have that, because if you walk in an attorney's office and you say, I need to get some stuff in order in case I pass away, what's he say to you? Well, let's get your will set up. You know, does he ever tell you about a trust? No, because he doesn't make any money off of a trust when you pass away. He makes money off of the will going through probate. So he's not gonna tell you that. He should, but he doesn't, okay? So let's look at what those three things are. Choice one on that page. Choice one says nothing. So I decided I don't need anything. I'm not gonna spend any money for a will. I'm not gonna spend any money for attorneys. I'm not gonna do a trust. I'm just gonna do nothing. Well, what do you do with your stuff then? Well, I got a strategy. I'll give it all away before I die. Anybody want to give all their stuff away before you die and put it in your kids' names, your brothers and sisters' names? Because you don't own it anymore. You lost control of everything. So that's not a very good strategy, because they may not take care of you, or they, you know, oh, they'll take care of me. They'll keep my money for me. Problem is you're over 65 at that point. You're getting, you know, better tax rates and so forth, because you're getting the elderly tax rates. You put it in the kids' names, they have to pay higher taxes, and you don't have any control. You could also have capital gains because you gave them that at that point. Versus when you pass away in Texas and you inherit property, there are no capital gains, there's no taxes, and so it can be a bad decision to give it away ahead of time. Another strategy people use if they don't want to put like a will or a trust, we'll put everything in payable upon death. When I die, everything will go to whoever I've put on there as beneficiary. Well, the problem with that is timing sometimes is not good. I could take, and it's hard to put all your assets to go on payable upon death. You know, I'd have to do each individual thing and make it payable. But what if, when I pass away and my kids are, oh, let's just say I'm giving it all to my kids, and one of them's in the middle of a divorce. Is that a good thing to handle a bunch of inheritance money? No. Or what if they're getting sued because they had a car accident? So timing can be a problem when you're distributing your assets. Again, if you have nothing in place, it just goes to it. Power of attorney, you can say, well, I'll give somebody power of attorney when I die, they can use the power of attorney. Power of attorney doesn't have any value after you die. They're only good till you die. So that's not a good strategy. So let's look at strategy number 2 is a will. Choice 2 is a will. A will is a document that says, here's where all my stuff goes, and has medical powers of attorney and different things you pay for each section as it goes. The main problem with a will and I'm gonna keep these things short because I wanna keep it simple. A will has to go through probate. Absolutely. That's the law of the land. Every state has the same thing. You have to go through probate. There are some exceptions to that. If you have nothing, obviously, you don't have to go through probate, but you don't have to go through probate with beneficiary assets either, but you have to be careful of those. But if you have a house, for example, you have to go through probate. Well, probate is expensive and it's time consuming. Average probate in Texas is about 3 months to a year. And if you have any complications or anybody doesn't like the distribution, then you don't, well, I gave this child 40% and I gave this one 20, and they decide they don't like that, well, now we could be in probate for a long time, fighting that battle. Typical probate costs are about 3 to 4 to 5%, you know, so 3% of, let's say you have $500,000 in assets, that's $15,000 that has to go to court, and that is really a minimum. You walk in an attorney's office and say, we need to do probate, and they say, well, give me $3,000 or $4,000 for openers and we'll get started, you know, give me my retainer fee. So probate can be expensive, it takes a long time. It's also public record. This is why most trust law got started by the rich, the very rich people. And I know we don't like the Rockefellers and some of the things they've done with their monies and what they've gotten involved in, but you've got the Buffetts and all these different people. Trust law, Rockefeller really took advantage of that because he set things up so that there'd be a generation legacy and so forth. And one of the main things that you didn't hear about is it's private. If I have the trust, it's private. When I pass away, nobody will know what I have, who I gave it to, where those people live, and my distribution. With a will, that's all public knowledge. I can go into courthouse and I can find out everything about what somebody had, who they gave it to, where they live. I don't want the people I give the money to knocking on, the creditors knocking on their door, or just other people, investors say, ooh, Tom just made a bunch of money. You know, he just inherited a bunch of money. Let's go see what we can talk him out. So the Buffetts and the Rockefellers and the other elite rich set up trusts that are totally private. It's a great part of the asset. And since a will has to go through probate, the final person in charge is the judge. He has to sign off on the documents. It says, I gave Joe all my money. And my wife said, well, that wasn't fair. And she fights it. The judge will make the determination of who gets the money, not me. I didn't get the final say. So let's look at here when we go to the next page. Choice 3, revocable living trust. So what is a trust? A trust, first off, does not go through probate. There's no attorneys required, there's nothing required. Whatever you set up is what is honored and goes through. You do not have to go to court with a trust. So that's one of the major advantages of a trust. It sets up, I like to think of a trust as a box. It's like this giant box, and I put all my assets in the box. Housing, checking, savings, cars, furniture, everything I have goes in the box. Well, now, who owns all the stuff now? The trust owns all the stuff. And you go, well, wait a minute, I don't own anything anymore? No, but you're the trustor, you control everything. You can put stuff in the box, take stuff out of the box, you can spend things, you can sell things, you can do whatever you want, it's your stuff. But it's now owned by the trust. So if you pass away, Chrissy passes away, what did Chrissy own if she's got everything in a trust? She didn't own anything. How much the judge says, the court system says, the attorneys say, well, what was the value of your estate? Nothing. You didn't own anything, it's all in the trust. See, it doesn't count against you. It's all in the trust. So thus, there's no probate. There's no time consuming. And if Chrissy said she wants her kids to go get everything, it all goes to her kids. There's no question, there's no need to do anything. It just goes from her to whoever she got designated. The beneficiaries can be anybody you want to be in any shape or form, just like with an investment account or a will or anything. You choose who the beneficiaries are gonna be, and then you pick a successor trustee. Because you are the trustee. If you're married, you and your wife are the co-trustees. If you both pass away, when you both pass away, there's a successor trustee. That can be anybody you choose. They can be a brother, sister, children. They can be joint. You know, there could be one or two of them in charge. It's your stuff. You make the decision how you want it done. They have absolute authority at that point to take all the assets that are in the box in the trust and distribute them the way you chose. They can't change it. They can't, oh, mom and dad both gone, you know. They said I didn't get my money till I was gonna be 40. I'm taking it today. No, you're not. You can't do that. I can control the distribution. I can say, I've got young children or something, they don't get their money till they're 18 and only for educational purposes. If they don't use it for education, they don't get it till they're 25. It's your rules, it's your money. You know, you get to choose the way you want it to be done. You can't do that with a will. You can't hold money without very complicated additional processes to hold that money. The trust holds it and allows the distributor, the successor trustee, to distribute it the way they see fit for that 16-year-old or whatever. Maybe a 16-year-old needs a car. If you have a will and the money's being held in the trust, the judge will decide if the 16-year-old gets the car, not you. You know, otherwise your sister or brother or whoever you put in charge makes that decision. So you need to get, the trust requires you to put everything in the trust. And that's where this company I've worked for about 19 years now, I'm gonna be 20 next year, has a system where people help you do that. And there's no cost for that. So there's somebody to actually put in, because how do you put your social security, how do you put your investments in the trust, how do you put your house in, what about the deeds, who does all this stuff? Well, you need help. So somebody helps you with that. That's part of the process of getting it in there, because there's a lot of legal documents have to be done. That's attorney work. Then after the attorney does his work, somebody else has got to take care of it from there. One of the things that the most common thing for most people is Paul dies. Brenda goes, I don't know what to do. We got Social Security, we got pension funds, we got money over here, you know, how do I distribute the house? Do I sell it? Do I keep it? Do I have that? There's people that will help with all that. And that's having help there when you need it. So that's an important aspect of taking care of things. But that's the main difference between a trust and a will. No probate with a trust. There's no holding things back. You can also take, and I should mention this, because the trust has the ability to put things in like blended families. Okay. This person's been married before, this person's been married before, they both have a house, they bring the assets together, they put them in there, now they have 2 kids here and 3 kids there. How do we divide up the estate? How do we make sure that what she brought into the marriage goes to her side and what he brought into hers? You can put all that in a will, you can't. It's very difficult, I shouldn't say you can't, but you can always do something. How do you keep those assets separate and divide them the way you want? You could, let's say the spouse, the woman, brings a house into the marriage, they decide they're gonna live in that one and sell his. So they sell his house and they live in the one house. And then when she dies, her kids say, well, I want my share of the house. Because they have a legal right to half of the house at that point. Well, where does he live then? You know, how does the money come? With a trust, you can say they have the right to stay at that house. And after he passes, then it can go to the children, or any combination of that. So you have the ability to take blended families and bring that into a trust. You can't do that with a will. So major features in a will is there's no cost. to settle. There's no court required, there's no judges required. With a trust, there's everything, there is no cost for any of that. You can put everything in as totally private, and it's all kept separate. You can keep it in different bins. Another aspect, and I didn't mention it yet, special needs. Let's say I have a special needs child, and I put the money in the special needs category, and I say, when I pass away, and my wife passes away, there's $50,000 here to be used for that child that's special. They can't inherit any money. If they're getting SSI benefits or disability benefits, they would lose their share or their funding from the state. So you don't give it to them, you keep it in the trust, and you dole it out for things that they're allowed to receive without any interfering with their benefits, or for additional things that they might be able to have. And so you keep that money and then it just gets doled out to them. They always have it. You took care of the child, but you didn't mess up their SSI benefits and disability benefits. Can't do that with a will unless you set up a special needs trust. And, what was that word? Trust. So the attorney has to set up, instead of a will, he has to set up, in addition to the will, a special needs trust. So the trust takes care of all that, and all those documents are included in there. There's no additional charge for that. It's just part of the package. So, questions?
I think I have a couple of questions. So, where does the charge come in at? Somebody has to get paid for these things. So,
Yeah, just as you would go to an attorney and get a will, you go to the trust, and you go to an attorney and get it done. I've been with the same company for 19 years, and so we have attorneys that do that. And I can tell you, when I was with the main company, it was $3,895 for the trust, and all the documents and the lifetime service of putting everything in the trust. And you pass away, or EJ passes away, somebody comes out and sits down with you and goes through all that and make sure that's all just part of the package. Because I set up my own company, it's $26.95 instead of $38.95. So you can't even get an attorney to do a will and so forth for much less than that, you know. So it's pretty cheap to do. Avoiding probate, and I'm not here to make that sales pitch. I'm just saying that's the price, $26.95, and with that is you never pay anything else. I mean, you don't have to pay the attorney again. You get annual reviews and consultations, and yeah, if you change all your documents, you're gonna have to type up some stuff, but it's not starting all over again. You know, it's just adding. You gotta have some new documents because you decided to change the beneficiaries around or something like that. It might cost you $100 or something like that. So it's not bad. Yeah, John.
So having a trust, would that keep the creditors from trying to take up your estate?
Creditors will still have access to your assets even though they're in the trust. So it doesn't protect you from creditors. It can protect the children's distribution from creditors. You guys both die, you leave all the money to your children, and they've got creditors that are hungry, and they're at the door. They cannot touch the money that's in the trust until the kids take the money out of the trust. They can be in there for 21 years until the problems go away. If they're in the middle of a divorce, the divorcing spouse cannot touch that money. So their stuff is protected. It doesn't protect you, the trustor or trustee setting it up. It doesn't protect you from creditors.
But after you pass, the debt doesn't, the debt's forgiven, it's gone. You're dead. Right.
Yeah, but your estate still has to settle the debt that you owe.
Yes, thank you.
Yeah. Be nice, otherwise you run up all your credit cards just before you
Shopping spree.
You buy everything you could possibly buy.
So, when someone gets to a place where they need to be put into a nursing home, a lot of the times what they'll do is they'll like they'll start drawing from your assets and from whatever you have in your banking accounts, all those things, to pay for the nursing home. Does a trust affect that at all? Can they still, access the trust to pay for the nursing home care?
Yeah, you have to disperse your assets 5 years in advance to avoid that completely.
But if a trust was purchased 5 years in advance, is it safe in the trust?
Yes, and it protects you against, I don't wanna put it, they can't take those assets, again, the 5 years in advance is the key.
Mm-hmm.
And the trust gives the ability to hold the money in there. They don't have to disperse it, they don't have to get rid of it, to avoid the trust. You can keep it in there. But again, it's at 5. But when I say 5 years in advance, it means that the person that's going into nursing home has to have given all their stuff away 5 years. You have to give up control of it and so forth in 5 years in advance. You can't keep the money in the bank until the last day and then give it to the kids or something.
Right, but putting it in the trust is giving it away, is that right?
But again, to avoid the nursing home spend down, it still has to be done 5 years in
Yes.
advance.
So if the trust is created 5 years, you pass that
Then
5
it's
years,
safe.
then you're good, right?
No,
Of course not.
no. You have to divest your interest in the asset. If you have a house, you put it in the trust, it's not protected from Medicaid spend down.
Got it.
But since it's in the trust, in most cases, let's say you ran up a bill, $200,000 in nursing home fees, and the government was paying for that. When the government collects that money from you, is it probate? When you go to probate, all your assets are dumped on the table. And the government recovery, which is what they call it, looks at the assets and says, ooh, you got a house. That house is worth $300,000. You owe us, the government, $200,000 because we've been paying bills for the past, 4 or 5 years. But because it doesn't go to probate, that never comes up. The government doesn't see that and doesn't, almost 90% of the time, never collects the assets because they don't go to probate. They go directly to the person you pick. So it's kind of a way around that. Yeah.
There's a way around a lot of stuff. There's also a way around, I have a friend of mine that their mother needed to go into a nursing home, but they had a lot of money. So they couldn't go into a nursing home with that exuberant prices. So what they did is they took all her money, all her assets, and gave it to the son and put it in his name. Then the fee from the nursing home went down to like she had nothing. And she got in for basically practically nothing, but yet he paid everything. So there's ways to get around stuff.
That had to be done 5 years in advance.
But it still has to be done 5 years in advance.
No, it didn't. It was done like that year and that.
No, I don't know how to do
They
that.
got,
They
they
did
got,
it.
they
They
got
had
away with
attorneys
it.
that did it, and they did it,
Yeah.
because they were trying to get their mother a nursing home.
Yeah, so we were in that situation.
Yeah, yeah.
And, of course, we didn't wanna put her there, but, her care was
Right,
extensive.
yeah.
And, but if we did that, then we would, forfeit all of her estate, in putting her in the nursing home.
Well, that's basically what they did. They put it all in the son's name. In other words, she had nothing. And but then they did it in a matter of like 6 months and got her in there.
Right.
I
Don't know what he did, but
don't know, he had an attorney.
that's not what the law says, that's all.
He had an
But there's
attorney.
loopholes in every law.
You gotta look at them. I have a question.
Yeah.
On the living trust, can the same person be your beneficiary and your successor? Or does it have
Yes.
to be 2 different people?
Yeah, your successor could be,
Cause I have the medical POA, financial, I have the directive, I have the living will, I do not have a trust.
now, and all those things are part of a trust. Medical powers of attorney,
Yeah, I have
powers of
all of
attorney.
that, I just
Yeah.
don't have something that
They would all
says,
be, if you
the
got a
trust.
trust, they'd be all updated,
but I just got mine free,
Yeah, free's good.
I got mine free.
And if you,
Not free, I belong to Legal Shield and get any legal documents basically free.
well, those on the legal aid fees, those kind of things that do that. They typically will only do a will and all the other
But
documents.
they did all of this, but I don't have a trust, so I need
No.
that in addition to all this other.
Yeah, because those things all protect you from medical power of attorney, who that's gonna be, you know, whoever that's gonna be, who's gonna be your power of attorney, who's gonna be your guardian, you know, they can, well, they don't usually do guardian, but the other things are all part of it. But you still have a will,
I have all that, yeah.
yeah, so the will means you have to go to probate.
Okay, maybe.
No, the law says everybody that has any kind of property
Yeah.
has to go to,
But you don't have property. But
well,
what if you have, what do I call it, stock, financial?
yeah, those can have benefit, that's what I mentioned.
I
Those-
have everything there just as going to a
Assets.
beneficiary, so it doesn't go to probate.
No, it does not,
It
that's
goes
what I
straight to
said,
that
that's what I said at the beginning.
Yeah,
Stocks, bonds, things like that do not go to
cause
probate.
I've tried to liquidate any physical stuff like that and put it in beneficiaries and things like that,
The
or
thing-
now I have to go to
The
probate.
thing you have to watch on beneficiary asset transfer is that the day you die, it goes to them,
Right,
regardless of what their situations are at the moment.
right.
You know, and that could be tax-wise, that could be a problem too. You know, life insurance is not taxable at that, but other investments are. If you got capital gains, they have to pay the capital gains, you know. If I could leave it in the trust for 2-3 years or so, I could maybe avoid the taxes by spreading it out over a period of time. There's a lot of other things that can be done, depending on the circumstances. That's what the attorney does. He looks at that and says,
But you can put it in the trust, and instead of designated every so many years, you can say at their own will how they wanna take it out, can you say that?
you can say that, yep. Yep, you can give them permission to take it all out the first day, or can't take it out for 5 years, or, you know, depends on,
Whatever you want.
you know, like I say, some
So
of
if
the,
I have all these other things except the trust, what is just the trust cost?
it's the same,
$2,600 for
yeah,
2,800?
because it's gonna redo all those and bring them up to date in case they aren't up to date. But it doesn't save any money, because the big document is the trust.
The trust.
Those are just add-ons. Yeah, right.
Talking about life insurance, is there any benefits to, maybe you could explain a waterfall trust, what we talked about?
Yeah, but the waterfall trust is, I buy a whole life policy, permanent policy, and I name Rocky as my beneficiary. And he
Rocky,
then,
we all heard that.
You have lots of witnesses.
Yeah.
Just gotta ask a question.
and he now inherits the proceeds from the life insurance. And life insurance, like I said before, is not taxable. So he gets this $1 million from the policy, but his obligation is what the big elites have done with millions and millions of dollars of policies. Rocky then has a provision that he has to buy a policy and for $1 million to pass on to the next generation. That's a waterfall, it just keeps cascading down and over, and that's what they did, they keep increasing the benefit.
But you can put your assets in that and make a higher yield than a savings account, right? To match what the
That's
policy is?
I don't sell life insurance anymore, but that's what the life insurance guy will tell you.
Yeah.
Yeah, put all
Like
your money
6 or
in there, and
7%
I'll get you a
versus
better
3.
return and you'll have a policy. It usually doesn't work out that way, because the fees on the life insurance eat up most of that value. But it's worth looking,
Yeah.
but that's the main purpose of waterfall, it just keeps spilling generation after generation. And you buy another policy, and then your kids buy a policy,
Right.
and they keep buying bigger policies because they're younger, and you can get more. There's certain ages, you get life insurance.
Did you say that a will could be argued?
Yeah, a will can be contested.
I thought that was the purpose of the will, your wishes are carried out.
Wrong. The will is,
A friend of mine, same age as me, her husband, just over summer, passed away completely unexpectedly, total accident, in a boating accident. had wills, he had all the things that you would expect. And, she's, like, they were probably looking at least a year in probate. Because even though he had a will, and it was all very clear, everything would be left to her and to his kids. His parents are contesting things, they don't want the kids to get stuff, and so even though it's a will, it still has to go through probate,
A
which is
will-
insane.
Yeah, a will can be contested by anybody, they don't even have to be related. I mean, I could contest your will, but a trust cannot be contested. Another big teacher, you can't contest it.
No, and it was, his parents were contesting, saying they didn't want his kids. He had just died very tragic boating accident, and his parents were like, I don't want your kids to get this inheritance.
You have a ranch or something, and you've got 100 acres, and you let your neighbor graze cattle on your land, you know, just as a working arrangement. And then when you die, he says, well, he promised me that land would be mine. No, there's nothing in writing, but it doesn't mean they can't go to the judge and whine and cry and say, this was mine, he's look what he did, and he took my stuff. Sorry, if the judge, you know, with our judges today, you don't know what they're gonna decide, so yeah.
Is it,
And she had to actually give, in probate, attest that he did not have any mistresses or illegitimate children or anybody else that could come and contest the will. You know, just lost her husband, and she has to sit there and say, did your husband have a mistress?
So at the trust, you can't do that.
No, trust doesn't go to court.
Okay.
There's no, you don't have to explain anything. With a will, anything can be exposed because it's a public record.
Ken, I had heard, and a family member did this, is that in your will, you can make a statement that if there is anyone other than those that are part of the will contest, they will not receive anything.
You can put
It's
that,
kind of a clause.
you can put that in there with your kids. One child's not getting anything. You can say, if they contest or protest this, they don't get anything. They don't get anything anyway.
So that would
So
possibly be what you would need to put in yours.
Well, but they hire an attorney.
Well, they can always
They can
contest it.
shred that, you know, it's pretty easy to get around that type. That one gets contested all the time.
Oh, no.
so is it likely for those contests to go through and like for it to change? Like is that often that happens?
I'm sorry, I didn't hear the first word.
Is it often that those contested, I guess, wills and all those things, is it often they change, or is it like
Yeah, there's
not likely?
some statistics says at least 30% of all wills get contested and changed.
Yeah,
And some, yeah.
I'm sorry, you through answering that question?
Yeah, I mean, it's pretty straightforward, it's about 30%.
I have a whole nother question. Okay, so capital gains is with crypto or with stocks, things like this. There's a lot of people out there talking about setting up a trust and the trust owning your crypto or whatever, and that if the trust owns it, that it won't be taxed. And people are saying no, it's not going to get taxed. But right now, you know, your capital gains, whatever you make, like if you buy whatever you buy it for, and then you sell it into dollars, you know, whatever you've made, that does get taxed. And so the question is, I'm bringing these two worlds together because that's the one thing I wanted to know tonight was, because you know people are out there saying that if it's in the trust, it doesn't get taxed. Is that true?
No, it's not true. The taxes, the trust is not gonna protect you from
The
taxes.
capital gains?
The capital gains, no.
Even though the trust owns it and you don't, the trust pays the taxes?
When you have a regular trust,
Uh-huh.
which is what we're talking about, it's still treated income tax wise as it's yours. You still file your taxes the same way you did before. All the state laws and federal laws are all apply. There's
Okay.
no change on that. there are ways of putting things in irrevocable trusts and different things that, but then you lose all control. They're not yours anymore.
Okay.
So, but yeah, and I don't know how the crypto thing is gonna work out. If I make $1 million in crypto gain, and I cash it out and turn it into money.
Yeah, I don't know. I bet.
I don't
I'm
either.
telling you, they're out there talking about it, and I've been wanting to talk to somebody that understands this because I sure don't.
Yeah, when we were asking the other Ken, I was still in the dark.
It's right there if you want to ask clarification.
I'm going to prison. Don't ask me. I just decided that. I was like, you know what? We're going to prison.
Yeah.
There's so much gray area.
Yeah.
The main problem with cryptocurrency is a physical asset that has value, period. So some countries are treating it as such, and there's, of course, state tax on that, but U.S. market right now, just be careful, do what they ask you to do today, and tomorrow it's going to change.
Yeah, I mean, I was still lost on that part of it too.
Yeah, I don't know. I mean, like, when this makes all this money, if let's say whatever crypto you're using does go up and you make a lot of money, I mean, Ken's made some money, you know, when it does, and if you want to use any of that money, the taxes are so. If you're in on XRP at $2 and it goes to $100, you know, I mean, it's a lot of capital gain tax that you
Like
pay.
15%, I think.
But they're saying that you can that there's ways to circumvent that if the trust owns it, and I just don't understand.
I don't think it's in the
Yeah,
capital.
the
gains
trust will not protect you from
At
that,
all.
to my knowledge.
Can we? Oh, you don't do Roth IRAs or anything.
No, I don't do investments.
And, you know, that's
The
what
Roth
I-
IRA might be the only tax shelter you have to invest.
Well, I mean,
in.
right now it is. So he hasn't
Yeah.
changed it.
Yeah.
Yeah.
But that just,
He's saying that. It's not.
No, Roth IRA might be the only current tax shelter I know that you have prepaid taxes, you purchase your crypto ETF, and then at 65 or out of retirement, they have that without tax.
but when the Roth comes out, then it's taxed.
Yeah, it still gets taxed when you pull it out.
Not a Roth IRA upon, no, because you pay the tax
A
on.
traditional IRA.
A traditional IRA is taxed.
Roth IRA, you pay the
Roth IRA is
taxes now.
$8,000 a year.
The Roth is the opposite of that.
A Roth IRA is $8,000 a year per person, and you can start with.
Right. But that's senior tax advisor, as Ken said before.
Yeah.
Well,
That's not what I do.
I am not a tax advisor.
I don't know why, but the fact that we're putting these two together in the same night, I thought that's what we were going to talk about, you know, and we're not. So I don't know. I just assumed that was the thing. Like, oh yeah, we're
Any
trusting this.
money made within the trust is still.
Just kind of
So.
I was waiting.
in the chatter, you know, just to talk.
As Ken just said, any money made in the trust, assets that are in the trust, they're still yours. You file your tax returns the same way if it's a taxable event, it's a taxable event. The
Okay.
purpose of the trust is to protect your assets from probate.
But you don't pay tax on that trust in that box until you remove it, a portion of it, if there is
No, if-
gonna be any
let's
tax
say
on
you
it.
have stocks in the trust, you got all your stocks in the trust, and you make $10,000 of gain that year. You have to file that on your tax return, whether it's in the trust or not. It doesn't make any difference.
But I think what he's asking is when you pull it out of the trust, do you have to pay taxes on it then?
Well, if there's taxes due, yeah, just,
But if you already paid the taxes on it
But
immediately,
we already paid this.
Yeah, you can't,
Well,
that's what he's eliminating, he's double dipping.
no, the
tax.
beneficiary does not pay the
You don't pay
taxes
taxes
unless
on
there's taxes
the
due.
stuff. That's how you get
The
around.
trust doesn't change the taxability of the
Okay.
Pull it out that way.
No.
That'd be only on the death of the death.
Its main purpose is to give you privacy, guardianship coverage, and keep things out of probate. And probate is, you just don't wanna go to probate. It's a mess, yeah.
I have a question from Ms. Stephanie, if you know or have heard on the blockchain. You were mentioning contracts being done on the blockchain.
Yes,
They're
smart contracts.
yeah. Well, these type of contracts, trust and different things being done there, from what I've read. Because what the blockchain is for is to eliminate the middleman, pretty much.
Right.
so I've heard that all contracts will run through there and it'll all, so it eliminate child trafficking, drugs, they'll know what you're into.
Right,
And they can remove your money,
right.
right?
So the good thing about the blockchain is it's very visible, you can see it. So let's say somebody came to my house and said, hey, I wanna buy your house. Once smart contracts are implemented, I can say, okay, it's going to be X number of dollars, they can basically transfer that money, cash or loan or whatever they have, and then they essentially get the deed to the house. So it eliminates your brokers, it eliminates your real estate agents, it eliminates hidden fees, like all the things like closing costs that you have when we close on this house, all the closing costs that go along with it, all of that goes away because essentially it's all validated by the oracles that monitor the blockchain. So yes, eventually it will get to that point where you can do everything. The blockchain essentially is the ledger.
Where now nefarious things can be done out here with lawyers and
Exactly.
that will eliminate that and a lot of the costs.
Which is why, I mean, this is pure speculation, but there's part of the speculation is that when you move into this type of a system, that a trust wouldn't be needed because it eliminates a lot of the taxes and all the other loopholes and things like that. Everything just becomes very simple. Your beneficiaries get it, and but we're talking about down the road versus the reality of where we are today.
So the people that monitor the blockchain are called oracles?
It's very matrixy.
That's not weird at all, is it?
They're hired by you.
Yeah, like we've been talking about how we need to go back and watch the Matrix movies now, and like with a completely different perspective on everything. Yeah. Okay, well.
That was good, Ken.
Thank you, Ken. Thank you. Appreciate everybody coming, and hopefully this was helpful.
Matt, is that yours? Is that yours? Yeah. Or you running off with Stephanie's?
Yeah, no, mine's over here.
Stephanie's cold wallet?
Hey, he doesn't have my 24 seed phrases.
I know you're not stupid. I just thought it was funny.
He's like, thank you very much.
What'd you say?
Thank you for
Which one do you have? You have one of the oh, God, okay.
when y'all did yours.
Yeah.
When y'all did yours. Oh, that was.
We should put our chairs back in the dining room.
We're sitting there for like.
Like, okay, wait, read. Push the button. And then we've got like 15 different versions of the same phrases. And I'm like, I can't read your handwriting. I'm not going to be able to read it. And I rewrote it, and then I'm like, is this rough or is this tough? What if I write down the wrong one? I can't tell.
I wrote it in like elementary teacher writing. It was so scary.
I know.
Here, let me get my teeth
It is a lot, and that's why I every time we cover some of the things that we already did, again, because it's still kind of good to hear it again.
I know, it's like, whatever stuff I'm taking it on.
Were you like these words? It's almost major.
Bye, guys.
So do we think that
Yeah, so it's good to see him out talking about some years off, but I got to see him live, eat, sleep, and breathe. Practically not sleep, because he was up on the computer all night, around the world. For years. So we actually went to rugby together.
Really?
Yeah, so he was playing rugby and we played in the stands, and then I went out to the bar afterwards where the guys were having a celebration because they won. They got made in a match, and we struck up a conversation and hit it off.
Oh, wow. Where was that?
So his match was actually in Frisco, Texas. So I was living up there in Dallas, and happened to go, and he was there.
Were you a rugby fan, or you just happened to go?
I just happened to go.
Wow.
I know, that's so I bet him in his highlights rugby career.
She won her own dog, so it's not recording still? Yeah.
No.